Good morning. How the Fed is quietly printing money again and what it means for you. Why liquidity matters, how it affects interest rates, and what smart borrowers should do now. Well, when most people hear money printing, at least I do, I picture a 2020 stimulus check or quantitative easing or QE. But in 2025, the Federal Reserve is quietly injecting liquidity into the financial system without officially calling it QE. And it's reshaping mortgage rates, credit markets, and real estate investing. So this matters whether you're a home buyer, an investor, or a business owner because liquidity drives borrowing power. What the Fed is doing in plain English that a fifth grader could understand. Well, number one, the Fed is increasing liquidity through the repo market. So banks borrow overnight using treasuries as collateral. And when the Fed provides more repo liquidity, the banking system gets immediate cash infusion, which is essentially a quieter version of money printing. Two, there's treasury buybacks, and those are creating demand shock. So the US Treasury is repurchasing older bonds and issuing new ones. So what this does is it increases liquidity and lowers volatility in the debt markets. Number three, the balance sheet isn't shrinking as fast as headlines suggest. So the Fed has publicly stated that QT or quantitative tightening is being offset by behind the scenes liquidity programs. So, in short, more liquidity equals cheaper borrowing long before the public realizes what's happening or happened. So, what does this mean for mortgage rates? Even if the 10-year Treasury stays choppy like it is, liquidity injections pull mortgage rates down, and that's because banks feel safer lending, simply put. Credit spreads will tighten, and investors will buy more mortgage backed securities. Housing credit becomes cheaper. And this is exactly why you're seeing mortgage rates drift lower, even without aggressive rate cuts. And the December cut's still up in play right now. The chances have gone down. But for buyers and refinancers, liquidity matters more than headlines do. So, what does this mean for a real estate investor? Well, more liquidity typically leads to rising demand for real estate, whether through credit or rates coming down. So money flows to hard assets when the Fed increases liquidity. And generally that means lower cap rates over time. It's not an immediate thing. But as financing costs fall, valuations rise. And that means more competition for stabilized deals. Institutional capital moves quickly in these liquidity waves, and I think we need to be prepared to do the same. So if you invest in Texas, especially in Houston, Katy, Fulshire, San Antonio, or Dallas Fort Worth, this liquidity cycle could be the start of a new acquisition window. So you might be wondering, what does this mean for inflation? Well, more liquidity means there's upward pressure on prices. But unlike 2021 to 2023, the Fed is attempting controlled liquidity strategy. And their thought behind that is it's designed to, number one, is support the credit markets. Two is avoid a recession. And three is keep inflation in a manageable range. And with that said, it's a balancing act, and markets are reacting fast. So, what should you do is if you're a home buyer right now? Well, if liquidity keeps increasing, mortgage rates may continue drifting downward. But waiting comes with a risk. As rates lower, more buyers flood back into the market. And when that happens, multiple offer scenarios return. And that's when home prices climb faster than the rates will fall. So investors absorb limited inventory. They're a certain segment of the market. And the winners of this cycle will be those who prepare early, not for those who wait for the perfect conditions. as a lot of things in life are. If you want to explore your options, Medallion Funds helps with conventional FHA and VA mortgages, jumbo mortgages, investor DSCR loans, commercial bridge and SBA loans, and private lending solutions. And that, my friends, is it for the day. You can visit my website, billrapponline.com. There are a lot of free tools, a lot of information, and as well, you can schedule a strategy call with me. Thank you for taking the time. Hope you have a good day.